Hey guys, hope you're having a great weekend. I'm going to dive right into it. So Friday we saw a number of names fall dramatically. One of them was Viacom. There's rumors that a fund blew up, so that was a forced liquidation on their part. There are a number of names that actually fell along with Viacom. So VIAC ticker. You can see that it was running at about $100 or so on Monday, or sorry, last week on Tuesday, and it fell down to a low of $40 on Friday. Closed at 48.31. That's a pretty substantial pullback, right? Within a week time spent, pullback at a low of about 60%. Now that's pretty good support, right around 40 or so. So keep an eye on this. The option chain liquidity isn't that great overall, but I do expect a recovery back up to probably around the 65 area in short order. And that could happen, this week, obviously. Keep in mind also this week, guys, it's a short week. We have Good Friday on Friday for those who celebrate Easter. So markets close on Friday, so we only have a 4-day week this week. So time decay will be extra rapid this week. When you're buying contracts for the same expiration, obviously remember that you only have 4 days, not 5. And that's also good for people that want to sell premium because you have 4 days of time decay versus 5, right? With regard to Viacom, let me just look at the expected move, assuming that there's liquidity in it right now. One sec. So looking at the option chain, you can see for this coming week that it's expecting to move about $8 or so in one direction, right? So upside is around 56, downside is 40 or so, right? But again, a lot of volume on Friday, not a lot of open interest right now. So that could change obviously this week as more contracts settle in and then spreads tighten up a bit, right? Right now they're still a bit wide for certain strikes. Obviously, out of the money contracts or obscure strike prices will have wider spreads. That's one of them. Next one I was mentioning was Discover, right? Discover, DISCA. You can see over here as well that Discover had a massive red candle on volume on Friday. The largest volume candle we've had, I think, in a few years now, right? Actually, in the last 5 years, the largest volume candle to the downside. So it ran up very, very fast. As you can see, it went up from November, $20 up to a high of 75 and down to 35 on Friday, closed at 43 or so. Now I think that we're going to see a recovery probably back up, but also at the same time, that was a pretty sharp incline on the upside. So perhaps it might take more time. Let me just zoom in a little bit right here, right? So yeah, over here, right? I would say that if we were going to recover, it'd probably be around to the 50 area, this little area of support right here. But overall, I'm not sure if the liquidity is there in the options chain. I'll pull that up right now so you guys can see. Just some ideas to look at this week, right? And here is the options chain. So for Discover, you can see not much open interest, and volume picked up a bit on Friday, but still, even so, the spreads are pretty wide for certain strikes, especially if you go with the obscure strikes. That being said, right now, the expected move for this coming, for April 16th, keep in mind they only trade monthly OPEX here. The expected move is around $10 in one direction. So upside of 52.50, downside of 32.50. Interesting ideas here, just because the valuations aren't too bad overall. Like right now, Discover's worth 26 billion. They're doing 10.6 billion in sales. So their price to sales ratio is 2.44. And then you also have Viacom. Sorry, let me get that up. Why is this not? Oh, one sec. VIAC. So for Viacom, you have a current market cap of 41 billion, sales of 25 billion, price to earnings ratio of 11.3. So not too bad on Viacom. Overall, that's a better deal probably than Discover. But there are a number of names that fell as well on Friday. And among those is also the Chinese EV makers. Well, actually, all Chinese stocks got hit on Friday because there is possibility of them being removed from American exchanges. Whether or not that actually goes through is anybody's guess, but this has been an ongoing conversation for a while now, and I'd be very surprised to see it actually follow through. That being said, let's look at the some of the charts, right? So looking at, we have XPEV and NEO, right? So you can see that XPEV has pulled back pretty sharply off its high from back in November. It was at a high of 75, now trading less than half that at 32 bucks per share. And then you also have NEO as well. And NEO pulled back from its high of, again, around almost 70 or so, 67 bucks roughly. It's now down about half that as well at 35.75, and it's near support, which is around the 32 area right now. Pull out a little bit further, you can see that it was trading much lower, so there is still downside. If it does break below that 30 area, easily downside 25, maybe even 20, right? But there are some names that have gotten beat up unfairly, like SE has been beat up a bit too. I know that Aaron from our group likes them a lot, and they're back at the 200 level, and they were at 275 not too long ago. So this uptrend is still intact, but you want to see it hold that roughly 178 area to have that going back to the upside again, right? As you can see, any dips previously over the past year or so have been bought up, and we've seen higher highs and higher lows as well, right? Otherwise, there's also VIPS, VIP shop, right? This one fell as well dramatically on Friday too, as part of that massive sell-off in certain names. Again, this is speculated to be part of a fund being forced liquidated on a margin call because they couldn't meet margin requirements. So that pretty much means that they were margin called and didn't have the cash to keep positions on, right? So hence the massive volume candle right here, and also the massive decline on Friday as well, from 45 to below 25, recovered to finish at 30.93. So some interesting opportunities here between VipShop and Viacom and Discover. There are a few other names too, like there's Open, what is it? I think it's Open Table. Sorry, Open Door Technologies. They fell as well. There's also Farfetch, ticker symbol FTCH. So if you pull that up, you can see FTCH. They fell as well on Friday. And again, you notice the same pattern here, massive volume, right? That's forced selling, right? No actual news with the company itself, but massive volume to the downside. There was some news with Viacom though. They issued some more stock, but that wasn't why they fell, right? It partially contributed to that, but that was the reason why they fell so far. So FTCH also fell down from a high of around 75 back in February, down to a low of almost 40 on Friday, recovered to finish at 51. Keep an eye on these names, especially as the IV elevates. If you want to own some of these names using cash secured puts, might not be a bad idea, because the IV is going to be sky high, especially if you get more volatility into the week ahead, right? And again, for anyone that just joined, remember that it is a short week this week. We have a Friday holiday, so enjoy your long weekend if you're trading full time. I know I'm going to be enjoying that for sure. But otherwise, I want to look at a few of the bigger names right now. So there's Apple. Apple pulled back again on Friday. It's been consolidating in this area of 120. You can see pretty strong consolidation. If I pull up the 1 month chart, you can see we've pretty much sat in this area right here for a while now. And that shows good consolidation, good support. So if this ends up being support, we can probably expect to bounce up into earnings back to the 130 or 140 area. And again, that'll occur in late April, early May, right? So roughly in about 4 to 5 weeks. You know, again, it always seems like earnings are over, and then they start again, right? So keep an eye on Apple for the week ahead. The expected move on Apple right now is let me see. It's not very high actually for this coming week. It's about $3 in one direction. So upside of 124, downside of around 117 or so, or 118 or so, right? Going out for a month on Apple though, you can see that, and here's where the IV really elevates a lot for earnings, right? You can see that for the April OPEX, which occurs prior to earnings, the current expected move is only about $6 in one direction roughly. So upside of 127, downside of 115. If you go to May though, you can see that because of earnings, the premiums are much higher, right? So now we have an expected move for May of about 11, 12 bucks in one direction, right? So, 132 area versus upside versus downside of around 109 or so, right? And again, 109 would be a great area to buy. Otherwise, there are a few more names that got beat up pretty hard as well on Friday too. There were Fox A also fell, which is Fox Corporation, right? I'll pull up the chart there so you guys can see that as well. Let me just minimize this and then pull up the chart. So Fox. You can see again, similar pattern right here to Viacom and Discover. It was at 45 or so a couple of weeks ago, hit a low of 35, recovered to 38. Not a terrible buying opportunity there, obviously, assuming you believe in the company long-term. Do your own research and remember that everything I discuss, guys, is for informational purposes only, and just to kind of stir up the ideas and get a conversation going so that you can learn more about how to think about trading, right? And investing as well. There are also a few other names like, DraftKings fell last week too. Roku fell pretty substantially last week too. There was Snapchat down on the week. They fell from about $60 or so down to, here, I'll pull the chart right now so you can see. The Snapchat fell down from roughly 60 a week ago or so to a low of 50. And again, this is a support area right here, right? You can see that we tested support numerous times, 1, 2, 3, 4, 5, 6, 7, 8 times now, right? So this area is a pretty good area. If you want to go long on it, obviously keep an eye on the stock and understand what they do and understand how they make money and understand the valuation of the corporation, right? Because they can still be overvalued, right? Like Snapchat right now, they're worth $78 billion and they're currently not profitable, right? So that to me is not a great corporation to invest in. I've never been a fan of them overall, but again, I'm going off the charts over here, just looking at the support area, which is around 50. And if you wanted to, for example, own it at a lower price, some cash secured puts might not be a bad idea. So doing so with cash secured puts, right now the IV is roughly equal to the HV, so right around average. But you can see that if you sold cash secured puts, at the 45 strike, for example, you get roughly $1, and these only have about an 18% probability of hitting by the April 16th OPEX, right? So not a bad way to play it, assuming you want to own it at 44 or so. Now, a few more names to look at before we go into SPY, QQQ, and IWM. There was also BILI that fell pretty substantially the past couple of weeks as well. And here's the chart on BILI. One sec. You can see that fell from a high of 150 down to 90 or so. And this area is not really support. Support would be right around 80 or so, right? So keep an eye on this over here again. The IV elevated on these names, cash secured puts are not a bad idea at all. Also, SQ fell pretty dramatically this week too. I mean, a lot of these bigger names fell, but SQ, you can see it's had pretty strong support the last few months at the 200 area, right? So if you want to go long SQ, again, cash secured puts are not a bad way to do so. And looking at the option chain right now on SQ, we can see that for a month out or for 3 weeks out, the 200 strike puts right here are going for about $6, right? So not too bad overall. You'd own the stock at 194, assuming you want to actually own it. Obviously, if you want to play the upside on Square into earnings, which will occur, so Square will be reporting, I believe it is again, end of April, early May. Yeah, so it'll be March, April. Yeah, so it'll be around mid-May right now, right? So for April OPEX, there shouldn't be any binary events between now and then. That shouldn't be a catalyst for a huge move. So again, if you want to own it at a cheaper price, you can do a cash secured put, or alternatively, even do a put spread if you wanted to. But also keep in mind that IV is kind of low right now. So going long options, a few months out, let's say when you go long for June, for example, you can buy the 200 strike call options in the money right now for about $30 each. If you want to do a spread, you could do that too, but I think it'd be better to buy the call first, wait for a run up to around 250 or so, and then sell a call against that. That would reduce your debit substantially and give you a nice asymmetry of risk. But obviously that requires larger risk at the onset of the trade because you're going to be buying the call option itself with no spread to offset your theta and vega risk, right? What else is there here? I mean, a lot of names fell recently, but for the past month or so, there've been a number of momentum stocks that have fallen pretty substantially. There was also a firm, which I mentioned a few weeks ago, AFRM. Again, they can still fall further. Where's the chart I had up? One sec, let me find that. So here's a chart of AFRM. You see that it fell from a high of like 140 or so down to now it's at $70, right? And again, right now the average price target is around 150 per share, so double the current price. But again, with IPO stocks, it's hard to ascertain where they're going to go. They can run back up very fast, or they can also drop continually for a while, right? So it's important to understand that these are much more binary bets than like an Apple, for example, or an AMD, or a more established corporation like like a Amazon or something like that, right? Otherwise, we'll look at SPY now, I guess, before we finish up. SPY, QQQ, and IWM. So Friday was a nice reversal, right? We had a nice, here's the chart for Friday, right? So we pulled down to 390.50 at around 2:50 p.m. and the market rallied pretty hard off of that into close, and closed at 395.95, right? So it rallied about $5 into close, which is pretty impressive, right? So that to me is pretty bullish. A nice volume candle at the very end of the day. I do think we're going to see 400 on SPY before we see any kind of pullback whatsoever. I'm still bullish right now because we haven't seen too much downside action, and any downside has been bought up. But there are names that you want to look at. Oh yeah, one name I also want to mention too was Intelia, which I like a lot, right? I mentioned to you guys, I'm reading these this book right now about CRISPR Technologies, which is Jennifer Doudna, and Intelia is her corporation, and they work on CRISPR. They're one of 4 corporations that work on CRISPR. There's CRISPR Therapeutics, there's Editas Medicine, Beam Therapeutics, and Intelia. And Intelia looks pretty interesting to me as well. Based on the valuation against CRISPR, they're very undervalued. And you see the 1-year chart over here. They started off back in October, November at around $20 a share. So right now it seems kind of expensive, but at the same time, there's a lot of volatility here, and we've seen massive swings from 90 down to a low of 45, back up to 70, back down to 55, and now we're at 65 again, right? So I'm just watching this. Obviously, I bought a small position in this last week, and I'm going to keep adding to it on dips. Back to the Qs now. It's triple Q ETF, right? So we have we closed at 315.85 on Friday. Consolidation in this area again as well, around 310 on triple Qs. And I do think we see a break back up, given that we have a number of big names like Apple, Amazon, Facebook, Google, Netflix, NVIDIA, AMD, all those trading at support areas, right? So that to me is indicative of a pending bounce. And once tech bounces, that's when we're going to see SPY push 400 plus, right? So I expect us to get somewhere around the all-time highs again on tech. We should see some big days in tech where we may see some divergence between tech and Russell and SPY as well, right? Speaking of Russell, IWM, last one we're going to analyze. So pull back on Friday to 210 area, and then pop back up to 220. So a lot of volatility here in Russell. Again, this is full of dog crap stocks that shouldn't be in anyone's portfolio really, but it's still been running, right? It's been running a lot. So I'm going to cut it over here. If any questions at all or comments, drop them below. Appreciate the watch. Obviously, if you enjoy the video, please like, subscribe, share it, whatever. And have a great week ahead. And I'll start recording right now for the Q&A session. So I just stop recording right now.